right at the very top right-hand corner. You hit subscribe. You can get the opening call for 1 month for $128. You can get it for 6 months for $595, which is a savings of $173. You can get it for a year for $995, which is a savings of $541 or 35%. All come with a 30-day money-back guarantee, folks. Everything to win, zero to lose. Basil Chapman, what's going on?
Tom, every week it seems like we're discussing something that hasn't happened either for a long time or ever before. This time it's the oil contract.
Isn't it amazing?
An amazing period. Yeah.
And back up. So check this out, folks, okay? A contract is 1,000 barrels of oil. Minus 40 means that someone would give you, yesterday, $40,000 to take the oil off your hands. So if you can figure out what to do with it, folks, you know, that's as wild as you get. I mean, 10 contracts is 400 grand, right? I mean, you know, 100 contracts is $4 million. Someone's going to give you.
So people have to appreciate that was every contract is a 40,000.
Yeah.
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 I mean, this is.
Yeah.
Whew.
It's
anyway.
Yeah.
Thank goodness it's not our problem, but wow, someone's going to.
Yeah.
Hopefully,
and, well, you know, it can be some
aberration.
That's right. What can be some of our problems out here, though, folks, okay? As a retail trader, that's why I keep bringing up these ETFs inside it, man. You're playing with fire, man. I
For
wouldn't be.
a long time you've been discussing that.
I wouldn't be trading them.
USO.
Yeah.
Yep.
Because they're not trading at their net asset value. Not all of them, but that's the problem.
So, yeah, which is what we spent a lot of the time in my all-day webinar that I had last Wednesday. I believe you have one coming up as well. That's very exciting.
Yes.
So, and it's so nice because in an all-day webinar, you can really get deep into something. It's not like normally you have to go quickly and you don't get a chance to actually describe it. Here you can see things unfold as you're talking about it. So it was very exciting. So we were looking for low bars, we were counting the peaks. So what's interesting is that we went along the Dow. The very low was the 23rd of March. We went along via options, and then we also added the Dow diamonds. So we were along the Dow. We looked for the fourth highest peak, and then we started getting a little cautious. It went to the fifth highest peak. That's E at 24,264. So that is just over 50%. If you see this middle chart here, the weekly chart, it was very important for me looking out to not match the 4-month rally in 1929. After a 49% decline, it went up 52% from the September 1929 Labor Day weekend, 386 high. It pulled back sharply to about 290. And then what happened is it had a 50% rally. Well, what's really interesting about that took 4 months. Now, and there was a template that I used for subscribers for quite a while that I actually discussed in my webinar called the Dark Cloud News cover back in February the 6th, I think it was, of this year.
Okay.
And I said, how markets respond is really important. So what's happened is now we've rallied all the way to the fifth highest peak. So I said, be careful. Now we can expect some kind of a consolidation. And it was really important because in the weekly chart, you can see this orange. This is the weekly chart in the middle. You've got to the orange line. It happens to coincide with the pink line. Orange is the 200-period moving average. The 9-period, the shorter term, is the pink one. We haven't gotten to the black one yet. And this is exactly where you'd expect some kind of retracement. So I think in many ways, the chart formation now has changed. We're looking at something very fresh. I think that the low that we saw on the 23rd at this particular point at 18,213, I believe we're going to pull back here, but I'm not sure. That selling was absolutely intense. So I think that, in fact, look at this chart right here. If I show you, this is the one that I was discussing. You remember this one that I discussed, the Dark Cloud News cover?
Yes.
This goes, here's the one at October of 2018 when it went down to the December low. And then there were minor ones on the way up. And then we got the major one. That was that February, March top. And now, look, we've had this incredible 39% decline. And that was massive, just negative news everywhere you looked. So it's very important that the markets had over a 38% or 42% rally. It's had a 50%. So this is a period now we're digesting those gains, and that's where we are at this particular point. But when you think about news, you remember how intense it was, and that was something that was fixable because all the Fed had to do was say, hey, we're not going to raise rates anymore. Okay, everything's over. This is very different. We haven't been here before. So there's a lot of things in 2020 that we're seeing that we haven't seen before. But I think so far this is really very good. And you've got some leadership. Yes, it's become very selective over the last 2 weeks. I like what I'm seeing. So in the meantime, we are long, as I say, we've got long positions in different stocks and ETFs. So far, everything's working out well. And what's interesting is that, I always talk about this peak D. If you look at I'm getting it right here, the dollar is actually holding, it's not doing much, but it's holding well in this lowercase h pattern. Spent a lot of time on last Wednesday and all-day webinar talking about this. Lowercase h can go to a lowercase m. So the dollar is holding pretty well here. It's not breaking out, but it's not breaking down. So I'm still going to keep my eye on the dollar because my belief is that if there is some kind of a recovery in the economy, it'll be reflected as the icon of the world economies. That'll be the dollar. So I'm looking to see if the dollar's able to get to the 102 level in the next 5-6 weeks.
Yeah, when you brought up that the 29 deal, this is intriguing, folks, because it wasn't the first downdraft of the Depression that got everyone. It was the second.
It was after they thought everything was fine. Right. We survived that.
Right.
But there was something else, if I can just bring this up right here. There was something else that in 1929, that top, even I say just, but it was really serious. The smash into, they call them Black Thursday. There were all those days, that terrible weeks that went into the November of 1929 lows. That was cash. That was money that people couldn't afford. What's happened now is that we've got the Fed behind us. Yeah. People have their IRAs, they have their Kios. They had nothing then. Right. So when that rally, this is what I'm talking about. You go from 386, there it is on the left side chart, the weekly chart, the monthly chart, 195. You run up 52% to 297 the week of the April of 1930. So that's 4 months. We've done something very different to this time, but you can't ignore that this is so serious. We've not, 20 million or more people out of work. This is just terrible.
Amazing. So
I'm just emphasizing that the charts so far, they were matching. This is what I was using as a template for quite some time. When I did my webinars, it's the first time I explained that the chart we were using as a match was the 1929 chart. That's right over there. You see this oval?
Have a great one, Basil. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures,